Hey, what's up everyone? So today I'm going to be doing some data collection on a currency pair, I believe. I think a good pair to do probably be Euro New Zealand. Haven't done that pair in a while. I was looking at it, I actually think it's a good pair to study because it's not your most common pair to be traded as well, just because there is a lot of trades on it, but it's not the easiest one to decipher. And something that I personally have found on this one is learning how to trade with the math psychology is a massive one for this. So what we'll do is let's just pick off a random piece of price. I won't go too far back so I can actually refine it and get more entries in there, but we'll study off this little period here, because usually when I take these big periods, the video goes on for like 2 hours, and it does go on for some time, so I will study off this little period here. So essentially what I'm looking at today is from October the 22nd, sorry, the 5th of October 2022 to the 12th of December 2022, so we're looking at just a few months there. So looking at the daily time frame, we already have established that we've tapped into a value area. I'm just going to remove these. Perfect. So this is really nice because what we can actually see on here is that we've tapped into this area here and price has responded to it. So we would already know that we would be looking at this as the point of interest for the VA, and then from here we would actually be looking to see how does price respond from that value area. So what we can see here is that price was actually looking like it was going to continue higher in this region here to continue going to the upside, but it was a failed continuation, breaking pretty much this area here, giving us a little scoop and then continuing to the downside. Now, it wasn't the one that just goes on for, you know, all the way down to the low, and these things happen, and it's something that I think a lot of people need to understand and accept when you are trading, that you can't just simply always expect to get in at this value area and be all the way down here, especially within a week, 2 weeks, 3 weeks, and so forth, right? Sometimes it can take quite a long time, and this is why patience is one of the most important skills to obtain when you are trading, because you need to understand that you may get into a position over here and you'll be out the position over here 3 months later, but the fine line difference is you would have capitalized tremendously in here. Now, the clue was that this wasn't continuing to the downside was the corrective behavior. And that's something to just observe from a high time frame perspective, when you can see it now in this point of view, that price did come here very correctively. There wasn't any defining factor that price was going to turn around at this point here, but at the same time, we're not here to you know, anticipate when the market's going to reverse and turn around and whatnot. We just actually just want to get involved in positions where we can take an A and manage it to be position. And really and truly, there would have been a bunch of positions in here where you would have been able to capitalize a decent amount of percentage, and you wouldn't have really cared much if the market turned around here. It's just, you would have understood what you're doing. So let's jump straight into it. So we're starting at the value area here, and we've tapped into this value area here, which is quite interesting. Now, obviously we don't have any interesting points, but we have a essential line in the sand here where we could argue that any price below here we could be looking for shorts. So if we jump into the 4 hour, because there isn't any daily structures here, as we can see, this ended up becoming a squeeze. So we're actually going to be studying how to have traded in this market condition of it being a squeeze. Then we go into the 4 hour time frame, and during this period here when price came up, we wouldn't have really known what was going to happen, because even though that this then sold off, it was quite nice. We pushed out, we pushed back in, we didn't get the deliberate continuation, push, continuation, and so forth that we would look for, and it did scoot back up pretty sharp, and then it came back down, and then once again we didn't get that confirmation that we needed. And this is why there's major importance around waiting for those confirmations. It's very, very much pointless to just take trades in here and here and here, because you're just looking for those break evens and those small wins and even those quick losses. So a lot of the time you just want to kind of keep it as low risk as possible and just eliminate all of these factors. Now, when the market started to accumulate in this range, and I'm just going to remove this ray line here, accumulated in this range, we could technically see that this was going to potentially be a continuation to the upside. However, we have to still stay present and understand we are trading in the area of value, right? We're trading through that right now. So it's looking probable for this to continue higher just because of how the price has been moving. So we have to understand that. How could we get positioned on that? Well, simply when we do look at this on the 4-hour time frame, we can actually just see that price was corrective in this area. This would have been our low. We responded from it. We moved to the upside. We would be looking for a 3-touch ideally, but if you were to take it at the 2-touch, you could argue there was a trade here. I would say it's more on the high risk end of things because once again, we don't know at this point if price was just literally coming down, created the bottom, correctively came back up, tapped into this area, created an M star, and then sells. So even so that there was a trade there, it's more higher risk because this could have just been a retest, creating a double top, and then it sells off, breaks the low and continues lower. You tried to get in positioned here and you got taken out. Best thing to do would have been waiting for this to then formulate over here, and then you would have had that and it would have continued to the upside. But what we can see here again is, and this is where, like I said, a massive level of patience would have been required. You would have then waited for something like that. So personally, I don't think this is an extremely terrible trade. If you took a trade here and you had stops below, I don't think that's the worst trade in the world. I just think for 110 pips you wouldn't have opted in for that. Maybe there was something more refined in there, but like again, we would then see this as the M star. So over here, I guess this is where you could really get caught in for the longs, because you would have seen it as a 1, 2, 3 mini double bottom. We've scooped, we've tapped in. I could compensate with a little bit more. Even if you went large on that, you'd have maybe a 3-to-1 as well on the risk reward side of things. So it's debatable. I mean, I wouldn't say that is the worst trade in the world because of how it's all constructed if you're playing the long, but then as you got taken out, you would have understand that something else is developing here. So just to analyze this little section over here, I'm just going to go to the 1 hour, and what we can see over here is that, okay, so where would we have looked for an entry? Well, we would have understood that, okay, we're in the value area, we've come back up into these areas. What can we see? Well, we can see that in terms of this being the, let's say the high value area, we've near missed it here, we've near missed it again, we near missed it again, and then we filled it over there, right? At that point there, you could argue the point that you would take an entry there. It's just, for me, there wasn't really the cleanest of angles on this. I didn't really have the supporting structure that I was looking for. I guess if I did force something, I would have looked for that to then see this come up, tap into this area and sell. I didn't even get the override on this, so really and truly that would have just, I would have let that one slide. And then we sold off. We didn't quite get a clear entry, nothing clear on the 1 hour, and I would still be staying on that. But then what we did get was we had this as the hook point, we came back down, we tapped into the low, and we came back up and flipped into this area. But once again, difficult to take an entry on. You'd have to be very patient, and then you'd come into these areas and potentially even take a loss. You could have taken a win over here if you did take the short, maybe even a break even, but more than likely there wasn't really any great trades. But you can see how there was a lot of traps in the market because of the near miss and the near miss here. If you tried to get involved here and then you took something like that, that would have been very poor quality, because what actually happened was we had the gap, we failed to commit and fill it again, we came down, we created this again, and maybe even another trap you could argue, and then eventually when we did fill it, we didn't really leave enough room. It kind of fully retraced, actually took people out and then sold off. And this is something that I see quite common with Euro New Zealand as well, sometimes with Euro Aussie as well, is that, you know, you get the entry and then it comes in, retests, and then sells where the entry was. And I think that's just, it's just something that you should bear in mind when you are putting your stops, especially with Aussie New Zealand. I faced it quite a few times. But going into when we've broken the low, which I think is extremely important, once again, if we had something like this and it was creating some structure in here and then we pushed insurance entry, you could have probably argued there was a trade in there. But because we're coming off that low, once again, it's one of those things where you want to zoom out and you always want to check these. And yeah, so we're going to go into the next bit and study this. So we can see over here on the 4 hour, if we actually understand price over here, we did technically have a level of a squeeze here. It's not your cleanest of price actions either, but there's the elements in there, and I think this is only visible because it's played out. Had it not played out, probably would have not had it drawn on like this. What I would have actually been looking at was, okay, so I'm going to invert this for a second. We've broken out, and then we've basically just come in and retested this area. That's all it would have been. But really and truly, you know, when you're looking at something like this, it just gets quite subjective on it as well. Would you have taken the retest there? It's a tricky one, to be honest, because when I see something like this, it's like, well, I would have seen that as the continuation. Maybe even that could arguably was the angle, and then I would have been looking for the entry within here, where we would have responded from this area, pushed up, pushed back in, continuation, and then we would have gone short. And that's what I would have preferred, but obviously we don't always get what our preference is. And we can see over here that there was, you know, this squeeze into this area. It just retested, but the nice thing about this is that when we responded from this area and we started pushing lower, we knew that we could look for shorts. Now, it has been quite difficult for us to decipher this for the shorts. We are, oops, did I just swap pairs? Yeah. I'll just go back up to where we were. So I'm completely lost now. Where were we? Yep, I think we were studying. Okay, yeah, this bit section over here. Wonderful. Cool. So yeah, so then we can see over here that, okay, overall, if I go to see it like this, we can see it's a little bit more clean. We can see that this was the larger correction, bit more corrective, and then on the way down, it hasn't actually given us clean entries. If you've noticed that, the only one that I can see that was quite clean was this. Perhaps in this area there was a trade, I'll check it in a minute, but over here, not the best as well. So looking at it in hindsight, arguably the trade was there, not the easiest. There is a trade just there as well, which kind of has jumped out to me, where you would have seen something like that, but really and truly that's a difficult trade to catch. It's a difficult trade to really just be like, well, it's corrective. It does look like an impulse correction, continuation to the upside. We're responding from a double bottom here. We're within the range. It makes sense to go higher. So you would take that with absolute higher risk, and you're going completely counter trend at this point. But the only thing you're really banking on is you're responding to that value area. So now the fact that we've broken this area down here, we can shift our focus to be looking at shorts, because if we go back to the daily time frame, what we can see is we've responded to the value area and we would be sitting down here. So this is what it would look like on the daily. In fact, on the weekly, it would also look like this, where it does look fairly good for shorts, especially with that heavy bodied candle at that point there, and then the follow through and break. Now we're trading in these areas. This is where we want to be positioning ourselves for shorts to potentially play an A to B movement to see if we can continue going short. So going back into the 4 hour for a minute, we can then see that price is not clean at all. So in first glance, you'd be put off by price action. It would completely put you off, because really and truly you're just like, where's the entries? It's very wiki, it's very difficult. Well, this is where the deciphering comes in place, and what I can really see is, okay, this was our point of sale here, but it's irrelevant because it's above the line in the sand. Then we have this area here, which would be my next point of interest, because it kind of left that hook, but it didn't actually get there at any point. That's completely fine. It started selling off, and then when it kind of broke this low, right, it broke it correctively, which is still okay, but we did leave this little hook point here, which technically aligns with all of that, but we left this little point here, and it's just something to bear in mind that we could either continue, tap into these areas, or we could respond to this and continue lower. We then go into the 1 hour, and we can see that this wick left a little reference point, right? The same way that from here, price actually created this continuation, right? Again, because it's in that corrective squeeze, it's something that you'd have to understand comes with this pair. We can actually see that price, even though it comes in these corrections, it still responds to it, like we saw above here. Comes in these corrections and it responded to these areas. We responded to this, we pushed down, and we actually got an entry within here, which I'll analyze after. Over there it's higher risk because it can still come back up, and we just don't want to trade against that risk. And then even down there, there was a few more entries in there, but obviously we want to compete where you have the best edge. Over here we can see there was a massive accumulation of corrective price action. We came back up, we scooped, we tapped into it. As soon as we tapped into it, we rejected. Nice evening star formation over there, and then there wasn't the cleanest of entries because that is fairly steep, and then we sold off. And potentially we would have to arguably say that there was an entry in there, but because of that wick, personally I would want to stay out of it. But if we can see it as a common pattern throughout the nature of what's going on here, then we may actually be able to capitalize on something like that. So we'll just have to wait and see. There is a potential trade here as well. Obviously I don't think that's a terrible trade. Only reason being is we've cleared that low, and now we're creating more continuation to go to the downside. So that one would have most probably been a break even, or even a small profit. We'll have to wait and see if there was a refined entry in there. Looks a bit more high risk, but we'll check it out. And then we can see over here, again, there was this small flag that was left in here, and then we responded to that, tapped into it and sold. But really and truly I wouldn't have been interested in that, because I would have looked at that as the area, seen it come up here, push, continuation and go. But I'm not seeing a lot of those entries come about. What I'm really seeing is that price scoops, taps into these areas and just sells off and doesn't really give you the entries. And usually continuations are a little bit more on the steeper side of things, but we'll have to wait and see. Over here I'd be looking for something a little bit more clean. As we can see that we had something like this going on, but it broke through and then didn't really tap into anything and go. We then continued in a corrective channel, created this, and then we sold off. So again, it's not the easiest to trade in one of these corrective cycles, but there is trades in there and we're about to jump into it. So I'm going to be looking at a few areas, but mostly I'm just going to mark these on so we can see that this was where the retest was. This was kind of a continuation here that potentially responded to that area, so I'll check that out. And then what else did we have? We have that as a continuation to the upside, but once again, we're not looking for longs really. We're kind of looking for shorts in line with the high time frame. Arguably there is a trade in here as well. It's just look at where it's positioned within that. It's just so difficult to really want to take a risk entry on something like that, because you just risk it tagging you in and out. So where I've positioned these entries, I've tried to make it as low risk within the high risk of everything. And I think that's also in itself a little bit more of a difficult thing to do. Yeah, so definitely over here there was no entry for me. Despite whatever this looks like, honestly I couldn't tell you there was a good entry. I think if I go to the line chart, yeah, it's probably a bit more clean on the line chart, easier to say that, okay, yeah, there was potentially a trade in here. But when you look at it over here, it's completely off-putting, to be honest. And look at the continuation flag there. You can see how even if you took the risk entry for any reason, you'd want to aggressively move to break even, because of the fact that it's not really responding from anywhere key and very significant. And then what tends to happen is price then wicks, creates this, and then it's correctively coming back up, making you think it's going to scoop, wicks up, takes everybody out, and then sells off. Like I said, you'd have to get very good with just maybe even understanding that, okay, I might have missed the trade, but then maybe I could set a pending order where I would have got in, and then if I get tagged in, then great. And I think in most case scenarios that could work, but it's a very risky way to trade in my opinion, and I wouldn't personally be in favor of that. Down here we can see that again, nothing clarity. Over here we do have that bullish sort of squeeze, but this is so large at that point, in a sense that you could position yourself in these areas, but the odds are, like, the high time frames going to the downside, you're going to be getting into an A to B movement, which, yeah, could form profitable, but you're trading against the dominant trend at that point. So if you did get taken out, you'd really blame it on the trend. And I don't think there's a lot to learn from something like that, but there is definitely a trade in here. I just think that price had this, and then it didn't really it responded to it, came back, and then we did the same thing again where we had this low and we responded to it. We didn't quite complete on this, which is completely fine, but then that became the overall structure, which in my eyes was just one large squeeze, and it just responded to the override twice, and then we pushed up. Honestly, I wouldn't even refine it on the 5. I just think we don't know where it's going at that point, and then it did come back and retest that whole area there. Didn't really tap into anything majorly significant, just that last little correction there, and then we sold off. And then when I look at that over there, yeah, sure, it's easy to say that you could have taken an entry there, but would you have really wanted to? And then even at that point there, if you did take this as a 2-touch with a scoop, which I think possibly could have been a pretty decent trade. I don't know what spreads would have been like, but let's say 28. Yeah, it would have dropped off for about 6 and then pulled back for break even and then gone again. So one of those ones. And then what was actually interesting was, as we mentioned before, then price just tends to make its way back up to where the entry was, correctively squeezed, which is a good sign. I don't really like how close this point came to the high, because it kind of feels like it was kind of reaching for that. But then, as we can see, it then responded again, broke below, and even if I did take the entry here, or even at the risk entry on that with 28 again, call it, then it ran for around about 4 and then pulled back for break even. Didn't take me out on both scenarios, and then it sold off again. And it's just one of those ones where again, in this scenario, if we did set a pending order where the entry was, perhaps we would have actually been in the trade. But again, you'd have to be very patient to sit through all of this corrective price action, understanding that price could wick up, tag you out at any point. So again, GN isn't the easiest one to trade. Sometimes it does come into really good scenarios, but in a corrective sequence, it's not been the easiest one here. So what I do like about this actually is we did actually create this. So if you do isolate this pattern for what it is, and you look at it like that, and let's just say you took it in like this, what did it trade into? Well, it traded straight into this little point here. So in fact, that wasn't actually a difficult one to decipher when you do look at it on the 15. But I wouldn't primarily be sitting here on the 15 analyzing it. I would probably see it like that. I would have been focused on this area if I was on the 1 hour, but then when I went to the 15, it did actually look a bit interesting, and there was definitely a trade in here. And with the confirmations, yeah, that trade was solid. So after the countless break-evens, as long as your psychology isn't damaged at that point, you could have positioned yourself in here, and yeah, possibly would have dropped off around about almost 6%. You probably would have walked away aggressively at 4.5. At its worst, probably around about 3%. You would have allowed it to pull back to before you kind of took profit on that. So overall, that isn't the worst trade in the world. That one's pretty decent, to be honest. I think out of everything we saw, there was so many different case scenarios there. This was probably the nicest one we've seen so far, even though it's got a subjective first touch, right? And that's the one thing that I dislike about it the most, is the first touch is very subjective. So even with that, I probably wouldn't have taken that entry because of the fact of the matter of the subjective first touch is, where do I place my first touch? So all in all, I wouldn't even class that as a very valid trade, even though it's there. It came in with an expanding, tapped into this area, reversal, boom, sold. Just wasn't the one. Interesting to see this though. So we did come back into these areas. I'll just move this ray line here for a second. We came back into these areas. We then tapped into it over here, rejected, and I thought there would be an entry in here, but really and truly there isn't. I'm not going to go to the 5. I can see it from the 15 clear as day. It was interesting, but just not interesting enough. You had this, and then obviously we had that, and just yeah, it was one of those ones where I would have wanted more. In fact, I do like this a little bit more, but again, a difficult one for most, and you'd probably be able to refine in that, but it's just where it's positioned as well, probably from an A to B. Yeah, I think perhaps there's more trades on the refined side of things on the 5, and you can just trade these corrective channels, but you know, when I've traded EN, the spreads do kind of put you off a little bit sometimes as well, so something to bear in mind. I'll just remove that one for a sec. Oh no, I won't. Put that back on. I'll remove that green line. And what we can see over here is, okay, let's say that this has happened, and then we've broken the low, and then we formulated this corrective price action here. Now this was probably the one that I like the most. And then yeah, off the 15-minute, there was a clear as day trade right there, and you could probably put a stop straight above it, 30 pips, 31 pips, and yeah, you'd hold through that anyway, even though you ran about 1%. Now that you understand EN a little bit better, you're not going to be so quick to move to break even, and then that would have run for around about 3%. If I just look at where the 3% lined up with, looking left, yeah, there wasn't anything majorly significant to the left, so yeah, it's just one of those ones. I probably would have walked away with 1%, I'll be honest with you, because that push broke that low, so really and truly 1.5, call it, yeah, 1.5, or you would have maybe even convinced yourself that it was going to respond to these areas, and then been like, let me just play extra safe and go 1%, and then what happened was you got taken out. So that was probably the best trade we've seen so far, because we cleared the low, created the continuation, and we sold off. We had a little override over there, responded from the 15-minute confirmation on the 1 hour. It didn't look too bad, it was visible, so it was quite good. And then what happened was we then did this, where we came back in, tapped into it, and arguably we could say this was part of a larger flag, but once again it failed to commit, and we didn't get any entries on the way down. So it is what it is. There was no trade there, but you could have truly taken a trade here. It just would have been more on the aggressive side of things, and then if you did, you would have probably compensated with about 28, seems like the number at the moment, and it ran for about 2%, came back for break even. You'd take the break even and walk away, to be honest. This one, we had the wick, we filled the wick, which is nice, and then at that point there, it would have been actually quite a difficult one, to be fair as well, because we sold off, which is fine because it's what we're looking for. But then, as we said, on the 1 hour, this looked very steep. There wasn't really any clear structure on that as well. So I think the most important thing is that we understand how we're taking these trades, and that would have just not had enough weight for the overall move. This is nice if we kind of did that and we sold, and then we had 2 bottoms, 2 tops, we created deliberate price action and sold. But as we can see throughout this whole entire nature of what's been going on here, there hasn't been any clean entries like that. Perhaps maybe you could have arguably said that there was a risk entry there on the 1 hour, which we'll quickly have a little look at now. And yeah, absolutely, yeah, there was an evening star there, so you could have taken this. Obviously, look how impulsive it has been. It did start off corrective, which is nice, but it was impulsive. So comes with the territory, 55 pips to the high. Probably would have compensated with 60 if I'm extremely honest, and then you would have understood the risks on this as well. To the low there, you had 3.7, so it's not so bad. There's no particular re-entries as I can see, and yeah, so this one actually ran for around about almost 7%, which is not so bad. I think around about that point, I would have just, even when it came to around about 6.4, I would have probably been aggressive, very aggressive at 5, so I would have been out the market around about 5%, truly. And yeah, it's one of those ones. I think you could argue it was a mismanagement, but I think because of the market conditions we're trading in, and we're seeing the multiple failures of continuations and larger pullbacks, I just wouldn't want to get caught in that. But you can see how this was a more complicated trade, because it wasn't your traditional structural trade. We were actually just looking at it as a scoop, and after we had that arc between the wick fill, we then strategically placed ourselves on the 1 hour, and then had to play the true risk, well, more for risk entry on the evening star, but it's very risky because of the impulsive approach. Could have just developed and done a lot of things, and yeah, it was just the one there. So we then had that, and I think obviously this trade, I was looking at it before, but honestly I don't think that's the best one either. It's one of those ones. So you can see throughout this whole period here that really there wasn't actually any good trades. Perhaps maybe if I went over and scanned it 5-6 more times, yeah, good 5-6 more times, I would have probably found something. But really and truly, like, I'm not trying to get too refined and too much on the lower time frames. I want to get involved on something that's clear, deliberate, and easy to decipher. You can see that a lot of these trades were difficult to decipher, and for that reason I was more than happy to just stay out of the markets. I mean, even taking trades like that, it's just I don't feel like I'm positioned in the best places possible, and I don't want to ever take a trade that feels like a gamble, if you know what I mean. I want to be taking trades that truly do fit in the criteria of something that's sustainable and I can replicate time and time again and make money with. So overall though, if you're looking at this as a longer period, you can see why even if you had it on watch, it would have been quite difficult over the period of, call it 42 to around about 70 days, period of 2 months. You would have truly 2 to 3 months, you would have just made around about 7%. But how many losses and break-evens would you have made as well if you just focused on this pair alone during this market cycle? So, like, again, we wouldn't have known that this was going to be how it was, right? We didn't know that by simply just taking this on watch and it being corrective, there would have been a lack of entries which were clear and deliberate as day. But these things do happen. Euro New Zealand's not the easiest one to trade, and I think there's major lessons in here as well that we can see that, but it doesn't mean that we shouldn't trade it, because during another corrective market cycle I can probably find a whole bunch more trades. It just happened to be that particular one where it was a little bit more difficult for us to actually find the trades. So all in all, guys, and that was a great video. So I'll catch you guys in the next one. Take care.